essentially wake up in the morning, go through my charts, and then pick the pairs that I want to put on watch. So this is pretty much what I do straight in the morning. So I went through my pairs, and to be honest, there's nothing that right now jumped out to me. There's a few sort of trades like GA where you could look for a potential long now, which is really interesting. Actually, can I invert this? No, I can't. Yeah, so essentially now, because we're up here, if we get something like that, it's a no-brainer. You could take the trade and go long. But I'm not going to look for that just yet. I think I'm quite happy with what I have here. So I've got shorts from oil and then shorts from JP225, and those are the main focus. So what I do is I pretty much just grab these. I go off, zoom out a little bit, make sure I get the whole thing in the picture because you want to be able to see that properly. Copy that, put it over here, and then I'll just quickly add in the other ones I've got here. So it was WTI Co USD, which is oil. And then I've also got, and this is a pre-made template that I've created. So if you do want a template like this, you can just reach out to me in the comments and I'll be more than happy to give you a template, or maybe if you want to, I can sit down with you and actually make a template which fits you well. I love using Notion. I love creating things. And if it can help you with your trading, I'm more than happy to help you out there. JP225, second JP225. And yeah, so now I've got those two there. I'll just take the screenshots of those and then I can write about them. So because it's a daily forecast, I don't do it like my SMB. I don't go off and take huge, what's it called, daily 4 hour, 1 hour, 15, 5 screenshots. I just essentially go off and take what's relevant. So if I'm forecasting a trade, for example, something like this, where I'm looking for prices to come down, create continuation like that, right? Just an example, then I'll take that as the screenshot and put it in there. In this case, I wouldn't be surprised if we did get something like that. And then we did short, or we just continued selling. But in terms of my trading plan, I wouldn't mind something like this. So I was looking at the JP225 there. So I'll just scroll down, put that in here. And then I can actually talk about the risk factor. So it is higher in risk, only because when you see it, it's actually it's below this. Well, there's a gap here. We did tap into this hook point here, but we pushed away, and now this is kind of in the middle, so it can get a little bit more complex, can become a head and shoulders. There's variables to this trade. So if taking a trade, you have to kind of consider those variables in place. But I'll be honest with you, the head and shoulders there's a neat little trick that I do where I grab this to this, and then even from the break, yeah, it could actually develop into a head and shoulders, to be honest. But more than likely, I'm more happy to kind of just wait and see how that plays. I would really just keep it very simple, and I wouldn't worry too much about it. I'll just kind of either put that there and say that's your line in the sand, and then if you did get something, it could just do what it did and just sell, kind of like that. So we're looking for that repetitive behavior. So if looking for another trade on this, because I am already in a trade, then I would essentially look for the same thing where you've got that. We either scoop up, we tap into it, and then we sell. And that would basically be the trade. So I could go off and take that. That's more than something that I'm happy with. If you are quite new to this, then it is better for you to just jot on everything and do it like that. And then you can see that into like this area here, you've got about 4%, and then to the low, you've got 6, and then over here, you've got about 8. So we'll just put the absolute on there, come back over here, and we can just change that over there, because I think that's more likely what I'll be looking for, and I'd say that's a little bit more higher probability in my eyes. But we have to be aware that we have the head and shoulders, so it lowers the probability ever so much. So it's not really high probability, it's quite average in my opinion. You'd be playing this sort of scoop and then rejection and then gone. It's risky. So you'd have to be situationally positioned to take a trade like that. And then you've also got the WTI co USD. So I'm not going to go too much on the lower time frame, but really and truly what you would be waiting for is continuation in here, and you'd look to go short. So it's a very messy structure at the moment. Could I probably see this sell off early? Yeah, I could just see it drop off, to be honest. Where were the trades? The trades were up here at the top. More risky, obviously. This would have been the riskier side of things. And then there was a nice refined trade in here, which I will just zoom into. So it was here. And then you would have taken the trade there. And you would have taken it for about 5 point something percent. Roughly around about there, and you'd be out around about here. Why would you be out there? Look to the left. So as you can see over here, because we tapped into this, you'd naturally be more aggressive. And that's why you would have seen it running 5% and you would have done that. So you can see the whole psychology here if you understand how I'm trading. You can see here that you had the low, so we'd be more aggressive naturally. We had the build up of volume over here. Then we got some internal structure and we sold off. And the entry was there on the 5-minute refinement. So it all works out. This was your first proper continuation as well. So it was a little bit more higher probability. It did pull back pretty sharp. We can't really predict when markets like this will reverse at these points, but it's the reason why we got more aggressive, and in this case it worked out really well. So just wanted to kind of throw that in there as well. But yeah, so you could get a consolidation in here for the short, but I think more than likely it's just going to be on watch. I don't have any particular setup just yet because I haven't got enough data. So what I'm going to be doing is I'm going to be waiting for some more data to be presented, and once the data is presented, I can then re-evaluate the risks. So now we go back to Notion. I've got my screenshots on there. What I'll do is actually I'll just talk about them. So something quite simply, so the DXY is has been moving down in a corrective squeeze. It has been stalling for over a week, and I think more than a week, to be honest. I don't know how long. I think maybe even a month. Let's have a little look. Yeah, DXY has been stalling for some time, isn't it? April till now. Yeah, it's been over a month. I wrote over a week, over a month, and has been accumulating a lot of volume for the next move. I am waiting for a clear signal from the market to take a long or short, remaining neutral. And that's as simple as it is, right? I've just put my thoughts in there because when I do come back in a new unit of time and I want to evaluate why this day was a really good day or why I made particular mistakes on this day, I can come back and read what my thought process was from the morning, working to the ground up. Over here, I can see price action isn't the most cleanest. The sequence is irregular and price has been quite sporadic, choppy. I am waiting for clear structure, then I will evaluate my entry criteria upon the structure, and I will manage the position more aggressive due to the choppiness is a new word of the markets. I think if I put a hyphen between it, it would actually be a word. So the one thing I love about the English language, you can make words up and they're actually words. So I don't really make it up. And then JP225, waiting for this as well. You know, it's the market cycle we're in right now. I don't usually always write down waiting for things. In fact, this is quite rare. And it's probably a good thing that I'm covering it in a video because I probably wouldn't have covered it in any previous videos, but I think I have covered forecasting like this in other videos. Essentially, waiting is a massive part of trading. So waiting for the market to tap into a AOI, area of interest, to then look to go short with the momentum, right? We are approaching the middle of range, the open range, right? Open range is just basically from this point to this point. This is not really in any way the most accurate structure. We don't know if this is even it. It's kind of in the middle of nowhere, tapped into that hook point as well. So it's an open range. So because we're in the middle of the open range, we can develop a larger continuation to fill the remainder of the range, right? Which I think is extremely important to understand, that this section in the middle here could actually develop and become something a little bit more complex and then sell off. So it is a tricky area, but there's two things that can happen. We either get momentum and we sell and we just go, or we chop around, right? So let's wait and see what happens on that. And WTI co-USD as well, likewise. I will be loose on my management, some but aggressive to BE once I hit +1%. Simple, right? So why do I kind of add in the management side of things? Well, simple. I add it in there because I want to be well prepared for when something does shape up, right? I don't want to be thinking about how am I going to manage the trade, what am I going to do. It's like I've thought about it well in advance in the morning. So even if I'm, for example, in the gym, I'm on the way to the beach. I don't usually trade much when I'm on the way. I usually like to trade by the screens, but if I am, then what I can do is essentially I can just take the trade and not really be too concerned because I've already done all the thinking prior. So then I'm like, okay, cool. Let me just wait a little bit. This is going to hit 1% profit. It should be in the impulsive leg, etc. If it's not moving the way I'm anticipating it to move, then I know that's like the first alarm bell, because with experience, you start to know these things. Like, don't get me wrong, this is here, but it doesn't by any means need to come there, because technically we've actually done enough when you think about it psychologically. Hence the reason why the trade's already good and probably already missed. We've already tapped into all of that, right? We've retested the back end of this. If you see it as that, and I'll just go to line chart quickly, it's probably a little bit more clean. You can see that we actually already had the squeeze, and then probably in terms of that footprint, it was already, it was just there. So that's kind of already done. That's one piece of its own price, and that was what it was. You had this bit over here where what happened again, price came in, tapped into it, and then it just kind of retested it. In this sense, we basically created something a little bit more, and then didn't even tap into it, actually, to be fair. I personally think, like, when you have runs like this and you see information like that where it's just failing, not to neglect it, but to really just understand that a lot of the time, there's a solid clue in there that price is probably just in its aggressive leg, and it's not really getting clear pullbacks. But because of the multiple near misses, you have to be aware that something like that could always be a possibility as well. I just think that's very irregular for the short, so I wouldn't be looking for that. I think if this was to pull back, something like that would be my more preferred entry. Only reason being is you've got clear as they structure, and your entry is kind of more clearer at that point. And I'd prefer a trade like that because it'd give me the momentum for the next leg. And then if I look at it from the 4 hour perspective, in terms of weight, it's not really the best, but it gives it enough weight to kind of push through to the next point. I'd be patient with this for sure, but I just genuinely see this being one of those JP225 pieces of runs where you get this, right? Let's just take it from there, put it in here, and it just drops, right? It goes from here, and it might be in the trickling sort of phase right there, but it kind of just goes, and then you're kind of sitting there like, there was no entry, it is what it is. Well, it's the JP225. If you studied it well enough, you know that in these bearish runs, it doesn't necessarily need to do these insanely crazy pullbacks. It happens, yeah, right? Look at the continuations, right? Another one to study for you guys is over here. You've got this, and you've got that, and that's sick. That's a trade in itself. You could have just literally been patient enough, taken this, and you could have made money, right? There's so many different little pieces of price here that's phenomenal that you can capitalize on. There was actually quite a few trades in this little bit of price here, but and you'll notice from a lot of the videos that will be released and the videos that have been released, I tend to have the JP225 on quite a bit now, only because I like to monitor that and S&P 500 for just small bits of information. For example, like opportunity, 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 a bit more difficult at that point, but there's always a lot of opportunity, right? And it's just really, really cool to observe and to learn these things because, at the end of the day, you can make money from being correct. So, yeah, that's basically it, guys. Just wanted to kind of throw that in with the morning routine and everything. And yeah, I hope that was super useful and have a great day.